Everybody wants that offer and compromise, that pennies on the dollar deal. But the reality is most people don't qualify for it. But there's another way to settle your IRS debt that more people qualify for, and it can save you tens of thousands of dollars if you do it right. Let me break it down for you. The IRS strategy that helped my client go from $70,000 owed to just $25,000 paid in full without lying, hiding money, or waiting for the IRS to show up first. Hi, I am Shanta Thomas. I'm an enrolled agent, a tax strategist, and the go-to for turning IRS problems into IRS wins. Today, I'm showing you how a partial pay installment agreement, also known as the PPIA, can reduce your IRS debt without going through the full offer and compromise process. So let's jump in. So what is a partial pay installment agreement? A partial pay installment agreement is not your average payment plan. With a traditional IRS payment plan, also known as an installment agreement, you're expected to pay the full amount no matter how long it takes. With an offer and compromise, you're asking the IRS to settle that full balance at one time, one payment or a few payments, but qualifying for it is really hard. A partial pay is kind of middle of the road. It's between the two. You still make monthly payments. The amount is based on what the IRS says you can reasonably afford. And when the IRS 10-year collection period expires, whatever's left gets wiped out. It's a legit payment plan and it's documented. It also works if you do it right. So how do you set up a partial pay installment agreement? I'm glad you asked. The first thing you want to do is create an IRS online account. So you want to head over to irs.gov. You can just say IRS personal account or individual account, and it'll bring up a link. Click on that link and create an account for yourself. You'll be able to see your full balance. Eventually, you'll be able to use the portal to request a payment plan. You can get transcripts and find out other information about your account. Then you're going to go fill out what's called a Form 433A. This is where you break down your financial picture, how much income you have, if you have a job or a business, your monthly living expenses. You want to be real, you want to be honest, because the IRS is going to verify all of this information. You also have to include all the income from everyone who's in the household that's helping pay towards bills, whether or not they're responsible for the debt. Then you're going to fill out a form 9465, which is your installment agreement request. Here's where you're going to be asking the IRS for a monthly payment amount. And you want it to be reasonable. You don't want to just throw any numbers out there. This is where the 433A comes in because it will help you come up with a reasonable amount, right? You want them to be able to approve it. So come up with a reasonable amount based on what your expenses are. Then you're going to go back into that IRS account, and where it asks you, do you want to make a payment plan request? You will go in and say yes and put in what you want to submit as your payment plan offer. If the system doesn't allow you, you may have to call into the IRS or submit that paperwork, that 433A and 9465. You'll probably have to do that anyway. So be prepared to explain and negotiate with the IRS so that you can get your payments lowered. But don't drop the ball. You have to stay on top of them. And the last step to all of this is to remain compliant. Once the IRS approves you for a payment agreement, installment agreement, or partial pay installment agreement, then that means you can't miss any payments. You have to file all future tax returns on time. You have to pay all estimated taxes, payroll taxes for your business, all that stuff on time. And you cannot owe for any reason at any time. The second you fall behind, your agreement is at risk, and the IRS is actually going to throw it out, which means you are then going to have to start all over with full penalties and interest that you'll have to pay. So let me give you a real life scenario in which I did this for one of my clients. So one of my clients came to me. They owed $70,000. She couldn't qualify for an offer and compromise because we tried to do that first. And she couldn't keep up with the IRS payments for the installment agreement they originally put in place. So what we did was we put together a partial pay installment agreement. Her monthly payments went down to an affordable amount. So instead of her owing $1,500 a month, which is over $1,500, she was doing about $5,000. And she was going to make those payments until her debt expired. It was going to come out to $25,000. So she saved essentially $45,000. This is a plan that works if you put the work into it and make sure that numbers make sense and that you can qualify from the IRS's perspective. There may also be some negotiations, so we'd handle that on her side. So let's talk about how people mess this up. So once you get an offer from the IRS, you got to make sure that you don't default. The first thing I find is that people will sometimes stop making payments. Sometimes the payment, something comes up, and then they say, well, I'll just try and do it again. The reality is, if you stop making payments, you're going back to square one. All the penalties and interest are going to be added back, and now you have to pay that full balance again. It's going to be higher than what you started with, remember, because we had lower payments. They also sometimes don't stay compliant. So they will maybe not file a return on time. They'll miss an estimated payment. They will owe payroll tax or not file that on time, or there's another balance. All of that has to get added back. So then your offer gets kicked out. That smaller balance that you had, that agreement that you had, gets thrown out, the whole thing, and you get start over. The leftover balance then gets added to the original full amount plus new interest and all the penalties and things. And so you're starting all over. It could have been avoided if you just stayed on track. The last thing is you cannot forget the IRS monitors this. Every couple of years, they're going to be looking to see if you can now increase your payments. So it doesn't mean that your payments will stay this way forever. The IRS could actually come back and say, well, now you're making more money, therefore we can increase the payment. So be prepared for that. And the last thing I see is that people lose it over just these simple mistakes. Again, they miss a payment, they miss a return. It just blows the whole thing up. This agreement only works if you protect it. And that's why strategy matters. Not just when you're trying to get the offer or that installment agreement, but also when you are in the period after that, making sure you stay compliant. So who does this work for? This works for everybody. If you owe $20,000, you can't afford to pay in full. If you don't qualify for an offer and compromise, if you need relief but still want to stay compliant. And most importantly, more people qualify for this than for an offer. So they just don't know it's an option. So if you are in a situation like this where you're saying, I try to do an installment agreement, I can't get into one working with the IRS on my own, or you've already completed an offer and the offer didn't go through, you're trying to figure this out, then we can help. If you book a call, we'll be happy to talk through your situation and see if we can assist you with putting a partial pay installment agreement in place. If you need assistance with any of these things, reach out to us. We will be happy to assist you. I am Shanta Thomas, and I thank you so much for watching today's video. I will see you in the next lesson.